when it comes to my favorite strategies when I'm trading indices, it just comes back again to moving averages, just like for the boom and crash, but they are a little bit there's a little bit difference, or a little bit, because now we're trading indices and not boom and crash, right? But I just love moving averages because my core strategy is BTMM. That's what I use most of the time, and I add just a little some things else, right? So that's why I love moving averages, right? So what do you have to, what's my favorite strategy, right? So first of all, for any strategy to work, right, we have to have a what, you must have a breaking market structure, or we have to what, to follow the trend, right? So let's take this example over here, right? We are in a downtrend. Why? Because we continuously breaking what, breaking structure to the what, to the downside, right? We are creating a series of what, lower low, lower high, lower low, lower high, lower low, lower high, then lower low, then this broke past that, then our next lower low is somewhere over here, right? And then we continue. So this is what, this is overall a downtrend, right? So you can also check the trend using what, using the moving averages over here. So if the 200 moving average is on top of the candlesticks, it means that it's a downtrend overall, right? So whenever the moving average, the paper one, right? So I haven't given you the settings for the moving averages, right? But the black one is the 50, right? And the purple is the 200 moving average, right? So it's the 50 and the 200, both are exponential, apply to close, right? So these are the two moving averages that I like to use if I am to choose any two, right? So the paper I usually use it for my trend, and the 50 also works for the trend, but it also works for my entries. That's what I also use for my entries. That's where I take what, I take my entries, right? I also use the 200 moving average, but I don't want to make this harder for you guys, so I'm just using the 50 moving average for my entries, right? So that it becomes a little bit simpler for you guys to understand, for you guys to use, right? So over here, right, so if I want another further confirmation of confirming where the trend is, I can add the RSI or the MACD, but today's video I just want to keep it a little bit simpler, just a little bit more smarter, right? So we are just going to be combining our price action with these moving averages, right? So over here, what do you have, what do you want to look for, right? So we're in a downtrend, as I mentioned, right? So over here, right, so right over here, we're not yet in a downtrend, right? But after we broke this, what, this trend line over here, so moving average are sort of like just they're just dynamic support and resistance levels, right? So they are just so like moving trend lines or moving support and resistance, right? So you can use them as for your entries also, right? So but you don't have to use them as a level as such, right? So over here, of course, this entry wouldn't have had it because 5200 hadn't crossed over yet, right? So we start looking for our entries when the what, 50 and the 200 crossover for a down move, right? So over here, what we want to do is to want to mark our zone flips, right? So if the moving average is the 50 moving average or the 200, but the 50 mainly, if it lies on the same point where there's a resistance or a zone flip or an order block, that's when we are going to be getting into the trade, right? So right over here, whenever there's a breaking market structure or something like that, we're just going to be marking what, our zones, right? So over here, the market didn't pull back to this area over here, right? So we move this to this next level over here, right? So this is a zone flip area, right? Because the market we were supported over here, had a pullback, and then it breaks past this what, this support, and the broken support acts as a what, as a resistance, right? So when the market pulls back to that area again, we are looking to what, we are looking to sell, right? So over here, right, you don't enter yet, right? Over here they didn't put back over here, right? So before you enter, you have to look for a candlestick confirmation and all that stuff, right? All that normal stuff, right? So over here, what I want to see when the market is pulling back is I want to see that the market is, it doesn't have enough momentum to keep on what, to keep pushing what, to keep pushing up, right? So I want to see this is the type of patterns that I want to see, right? It's giving red candles, green candles, red candles, green candles, red candles, green candles, right? So it's all like consolidating, right? Especially in this area over here, it was still consolidating around that 50 moving average. So we are going to be taking that entry because a slowdown in momentum just means that the market doesn't have enough what, enough for momentum to keep on pushing what, to keep on pushing up, right? So over here, where do I enter, right? So right over here, I enter when the market pulls back to this zone flip area, right? Also where my 200, where my 50 moving average is still below the 200 moving average. Right here I've got a doji formation, right? A doji, so like forming a, so like an evening star formation over here, right? So maybe I would have taken this entry, but I don't like taking an entry when the candlesticks are still above the 50 moving average. I still want them to come back a little bit under, then they come back to retest again, right? So over here, when the market pulls back again, right, I've got the same evening star formation. So my first entry probably would have been this one over here. Then it started to consolidate where I'm still in there, right? Gave me another so like railroad track, right? And then it broke past that, right? So you can also draw your trend line in here, right, so that you get further confirmation when to enter that trade, right? So over here, you can draw your trend line, right? And when that trend line is broken, right, you can enter into that trade, right? So that's just what we want to see, right? So over here again, we mark what this area over here. Let me drag this zone flip area over here. It's also where an order block is, right? So this region over here, right? So right over here we've got a zone flip, right? Because this was a support, right? It gets broken, the market pulls back to it. We also have an order block over here, or supply zone, right? We have a 50 moving our 50 moving average in there, right? So right here, that's when you want to enter, right? But I wouldn't encourage you to enter over here, because as you can see, the market had what it the momentum was growing, right? Over here, when the market was pulling back to that area, it was growing in momentum, right? So I want to see a pullback, something like this, right? It's giving red candles, green candles, red, green, red, green, right? So it's so like consolidating, right? This entry, I wouldn't have taken it, right? Though sometimes I do enter, but it's not for, if I'm looking for the best trades only, maybe I'm growing a small account, maybe I want to be very, very cautious, or I don't want to lose any money, right? I don't enter these setups, but I do enter them, especially if there is a major confluence like this, because these are three confirmations in this trade alone, right? So that's what I want to see, right? So let's look for an uptrend. Let's see where the market was trending up, right? This broke past our 50 moving average. I don't think that this is suitable for an example, as our example, right? And it seems like this one was in a downtrend or continuously, right? So let's come over here, right? So over here, right, as you can see, there was a breaking market structure to the upside over here. Breaking market structure, create our lower low, sorry, create our lower high, create our higher low, right? Break market structure again, creating a higher low, higher high, higher low, higher high, higher low. So it's now in an uptrend in this area over here, in that region over there, right? So over here, what we want to do when the market pulls back to this area, to this 50 moving average over here, right? That's when we'll be looking for our entries, right? As you can see, we've got a zone flip area over here, right? There's also a 50 moving average is also sitting right over there, right? So right over here, I wouldn't enter immediately, because as you can see, the 50 and the 200 haven't crossed yet, right? But judging on the market structure, it's showing us that we are now in an uptrend, right? So over here, maybe you enter when there's breakout of this small trend line over here, but most probably you wouldn't have entered over here, because the moving average hadn't crossed yet. But as for me, I would have entered, because I know I'm used to these types of patterns, right? But if you're not yet used to them, just wait for the crossover in order for you to wait for your entries, right? So we've got another entry over here, right? So right over here, let me just track this over here, right? So let me delete this trend line so that it becomes a little bit easier for us to see, right? So over here we've got this zone flip area over here marked, right? Because this was where our pullback was ending, right? And pullback, and then we've had a breakout, right? And then when the market put back to that area again, right? We also have something like an order block right over here, a demand zone over here, right? And we are testing the 200 moving average and the zone flip area, right? So that's a confirmation for us to enter that trade, right? Over here again, we move again, and as you can see over here, we've got the zone flip area here and the 50 moving average. You take our entry over there. It's just that simple. That's all you have to do. You have to look for either a demand zone or a supply zone, or your zone flip areas, or even a trend line at times. But usually I don't use trend lines for these types of entries. I usually use those three setups, right? Those moving average, supply and demand, and support and resistance. Only those three. That's what I just have to look for. That's what I usually look for, and most of the times it does work, right? It just follows that current trend, right? So that's what you just have to do, right? We've got an entry there, we've got another entry over here, but this one broke past our 50 moving average, so this one we wouldn't have entered here, but we would want to enter when there's a confluence of almost everything, or at least two things, right? So this one had an entry over here, but over here we've got what, a supply zone, but we've got no moving average. That's very close, right? We want the moving average to be a little bit close, like what it did over here. It missed a little bit, but it was very close to the 50 moving average. This one is still in the middle. It's neither is it just near the 50 moving average, nor is it near the 200 moving average. So we wouldn't have had an entry over there, right? That's just what you have to do, guys. So if you want to learn more about this strategy, then if you want to learn more on how to use it, even on boom and crash, I suggest that you watch this video next.